This is my analysis on the stock market, S&P 500. And we're going to take a look at the short-term view, looking at 1 to 3 weeks ahead on a daily chart. I'm also going to look at the stock index report. This is a daily snapshot of the 3 indexes, and I want you to see all of the information that's in there. It'll give you a great idea about the market conditions as we look in that. So this is what Matt prepared and posted for our members, level 1, 2, 3, 4, 4 plus. All of them got this last night, getting ready to set up for today. So I will show you what that looks like and what those indicators look like in there. So I know a lot of people, they come here, they listen to what I say and scroll forward. Well, this is extensive, so you're going to want to really see all of the information that I'm going to show you, and this is going to be a relatively long segment when I present this. So let's start out by looking at the S&P 500 and daily chart. For those of you that are brand new and have never seen these charts, and of course we get many people that come and see it for the first time, we do cycle analysis. That's not psychoanalysis, it's cycle analysis. And this is how we understand the energetic movements in the market. And you've seen our analysis, those of you that have, and you understand the value of doing this in multiple time frames and also using our proprietary indicators. The indicators we have on here that you can see are the slim ribbon, which is right in here, and the slim ribbon PO, which is in the bottom, that gives you momentum conditions. So when the slim ribbon is pointing up and the 3 moving averages are pointing to the upside, then you have bullish conditions. And when that happens, this is green, and the bars are green, as you can see. When you get into really negative conditions, this turns red. The slim ribbon is pointing to the downside, and you have the highest probability of impulses to the downside. The later you get in a cycle condition is when you can get the capitulations on the downside. This happens to line up with the weekly, and that's when you get the biggest downsides, and that you can see right over here. Here you could see this was a really strong period there as momentum was strong, and then you got this upward resumption signal, and you can see there. On the bottom, these are cycle brackets. These are a drawing tool. These are not the cycles. The actual cycles are how we draw them here up on the top, and it's how they resolve that's what's important. When you get a rally that aborts, as this one did very early, and then broke down underneath this low, it tells us it's likely to decline all the way through this period. And we put in these yellow ovals on a lot of charts that show this is where the biggest downside risk is, and that's what we got. We were looking last week at the potential for a rally up here for a rebound, 39.36 or even a little bit higher, but it tried to rally and just gave it up. And this minor little cycle right over here almost had no rally. This is called the left-hand translation. This is a very large left-hand translation right there, which was just a big signal for the downside when it broke this level. So where are we right now? Well, we're coming into the final stages in here. Now you can see these 2 blue verticals right here. This is the ideal low timing range. Generally, it's 3-4 days on either side of this. Of this nested bottom right over here. So that would say maybe another couple of days in here. And we had originally, had said, we'll give the market the possibility of stopping on the downside at the 78.6 at 37.75, but really needed to come down and take out that low at 36.36. And when it was way up over here, it seemed like that was impossible that was going to happen. But here you are right now, practically getting down to that level with some number of days left ahead. Now, I want to also say that the 3 or 4 days past this ideal would just be normal. A lot of cycles are running long because there's a giant liquidation going on right now, a capitulation. What is a capitulation? It's in the stages where investors and traders give up. They essentially have had it. and they sell out their positions. And then there's literally nobody left to sell, and the prices are usually down a lot when that happens. Then you get into rebounding rally periods like right out over here, but I can't put a target out over here until I know where this low is. So we just know and believe that somewhere out here in October, there's going to be a rebounding period, and that exists on the intermediate patterns also. So that's what we're looking for. A washout right in here, further downside potential, likely taking out 36.36. The next support on the weekly pattern is around 35.30, which is a Fibonacci extension level on the intermediate pattern. And that to me is an extreme. If it got down there, I think it would rebound very quickly from that level, at least now. So this is the short-term view. This is just the next few weeks that we're looking at in here, and we think that we're in the capitulation washout stage, and there could easily be another 100 points to the downside in here in just this next week, or it could tickle out that 36.36 and then be, washed out at that point and not have any really big declines after that for a while. But I really want to talk about the conditions of the market right now because that's really important to this analysis. And we share those market conditions with our members in the SIR Daily Snapshot, Stock Index Report Daily Snapshot. And I want to show you that because I'm just showing you short-term analysis right now, but it's really important to understand the conditions in the market. So I'm here at the askSlim website that you can see right there. And what we're looking at is the daily snapshot. This was for the close yesterday on 9/22. And I'm going to take you through this and you'll be able to see what we shared with our members so that you really understand. There's some little tips in here on the top for our members. We have a lot of members that may not have really looked at that extensively, so I thought I would go through it. So this is it starts out with technical summaries for the S&P 500, NASDAQ, Russell. I'm not going to go through all of this, but you get the idea. This is updated all of the time, and it gives you the conditions. You can see bearish right there, all of the important numbers for the NASDAQ, the S&P 500, NASDAQ, and the Russell. So I'm just going to stop it right here so that you can get a little screenshot if you want of this and take a look at that. Of course, our members get the updates on this every single day. So that's the technical summaries that are in there. It's not really what I wanted to show you. This is the askSlim charts right there. So the chart that is really important for short-term traders is the 2-hour with the slim ribbon indicator, and that's pointing down right over here, and you could see the slim ribbon PO on the bottom. These are negative. You can see the negative resumption signals in there. So the 2-hour pattern is very important for short-term traders, and all of the information is in here, support, resistance, and this was quite negative and exists in a very negative condition right now. Now, that is the 2-hour chart for the S&P 500. I'm only looking at the S&P 500 right now because it'll take a long time to go through all of the other ones. This is the chart I just showed you on the daily chart. So this was delivered last night. It just does not have today's bar in there. And you could see it pointing down to that 36 area right there, that red arrow, where it was likely to be going down to. Now, this is the weekly chart that a lot of people ask me for when I do this for the market week. We put it up there for free. So we don't give you weekly and daily normally. We just give you one or the other. We don't give you all of the indexes either. So you can see in here, we're in this area of capitulation, this yellow zone right here. You could see it was yellow here, fell, yellow oval here, fell, and we said it would happen here too. Here you could see the reversal scout where it turned negative there, and then you had a solid month to the downside and getting into this period of a potential bottoming. And as you can see, we're projecting after it makes the low somewhere down over here, it will be coming up and getting this rebound in the fourth quarter as we believe that would happen, but then a lot of risk out over here in February, March of next year. So this is why I said in the beginning of the show, if you're looking for this big decline to be the beginning of a new bull market, after that, well, I think you're going to be sadly disappointed. I think this would just be the bottom of this downside leg. So that's what you get when you look at the charts. Now, if you go to the short-term outlook right over here, you can see in here that what we're looking at is the trend and momentum technical evidence. So you get the pattern structure, the slim ribbon momentum condition, reversal scout, all of those for the daily right over here and for the intraday right here, and you get a good idea as to what the conditions are right now. You can see in here that the short term last change was September 8th when it became negative. The slim ribbon was August 31st. So these have been quite negative and giving you a warning way out over there. Let's take a look at the intermediate outlook, which is 1 to 2 months, and you can see the same thing, really looking quite negative. And these, you're going to need to get some very significant changes in the momentum conditions in order to be getting this fourth quarter rally that we think is going to happen, this rebound. So you're going to need to get some really good rebounds that happen to get that to change for that 1 to 2 month outlook. And the 3 to 6 month outlook, which weighs heavily on the markets, looking at the monthly charts, are extremely negative in here. The momentum condition turned negative back on May 6th, as you can see. So that's really a negative condition that exists in the long term that will prevent any real big upside moves in the markets. So this is the NASDAQ. I could give you the same three things on this special daily stock index report we do, and the same thing for the Russell. It's all there. I just don't want to spend another half hour going through all of those. Let's take a look at the technical evidence comparisons, and these are important. So this takes a look at the momentum conditions in the S&P 500, the NASDAQ, and the Russell. It gives you the long term, the intermediate term, the short term, and the near term, which is the intraday. And you can see in here, it is bearish across the board. And it has been that way for a long time. And our members essentially can see this. And what will happen as you start to get rebounds is that the near term will begin to change first. And if it's strong enough, it will then affect, like a domino effect, getting into the short term here. And these will begin to get better. Well, right now, they look pretty horrible, as you can see. Let's take a look at the 2-hour intraday momentum conditions that you can see. And look, this turned negative on these 2-hour charts, and you can see when the slim ribbon went negative. And here is our MCI, our market condition indicator. And when it comes up into the swing zone between 25 and minus 25, and then gets back under minus 25, that is a very negative condition. And these are really negative, as you can see right there. So everything that we have had has been telling our members about the conditions being quite negative and setting up this capitulation that we have been in. Here is the cycle analysis table in there, and this gives you all of the information about the weekly cycle patterns, the phasing that we're in, and what the ideal timing is, where the bottom timings are projected, and giving you both for the weekly and the daily structure in there. This weekly and the daily cycle structures are negative, and they've been that way for a while, and really have set up this big decline that we're in the stock market. You can see this negative configuration confirmed on August 26th, and then you got this big decline. And the projected range for the lows for the cycles were somewhere out here 921 to 929, and you can see that's what I've been telling you. And this projection has been there for a while. So I really wanted to show you this amazing report that is put out every single day by Matt. He does just phenomenal work, and of course, cycle analyst, and has a great handle on all of these things that we offer right here. And I really would, like you to be able to get that, and to be able to, here's the daily chart I just showed you. Normally, when people get that and want to sign up for level 1, they only pay $19.95 a month. I mean, it's just incredible. And what we're offering right now is a special so that you can get all of that and take a peek at it. So you'll get the first month for just $10. You can get all of these things I just showed you, the stock index report with all the analysis on the 3 indexes, with all of the cycle charts on there, projections and key levels. Additionally, for those that have longer term perspectives, you'll get our Slimulator Momentum Tracker. That's 1,000 plus symbols and groups with our built-in algorithms, and that gives you the directional bias. You can also go to every week, you're going to get our SPDR, that's the Spider Select ETF weekly review with important market sectors, and great resources that we have in there for trade planning with our worksheets, and access to our Discord server for support. We have just massive use on our Discord server, and our analysts are always in there helping everybody. You can get that for $10 for the next month, and then you could cancel it anytime. You don't like it, you don't want to spend money after that, I get it. Take a look though. Click the Learn More button on the top of the front page at askSlim, and you will then be able to see everything that I showed you in there. That is level 1 for $10. Imagine that. Do that to support yourself. Do that to support us if you watch our show every single week.